How's it going today? Microphone test, 1, 2, 3. Let me know if there are any levels off. So happy New Year's to those that are new and joining me. We're just going to give it maybe a minute for some people to join, and then we're going to get started today. First of all, with the crypto market update, and then I'm going to hunt for a trade live with you guys, and maybe we're going to be able to find something to trade. I mean, just waiting for people to get on. USDT looked promising today, and I was going to short it. I was ready to enter with a good size, but the first thing you check is the volume. If the volume doesn't meet the criteria, it doesn't matter. You're not going to trade that coin no matter what. So if the volume doesn't meet the criteria, mine is at least 50 million for a low size position, a low position size, but for a large size position, like a position size of over 100K, you'd probably want to trade a coin that's moving over $100 million traded an hour per, on Binance, per 24 hours. So this coin here is trading at about 34 million every 24 hours. So you can just imagine how little volume or capital it needs to actually drive it down. So anyways, guys, so thank you for joining me. For those that don't know me, my name is Phil. I've been in the crypto game for coming up for 11 years now, mainly day trading and of course trading for this or holding for the cycles every 4 years. There's a lot of debate right now about the cycle of the 4 years being broken or not. So let's take a look at Bitcoin quickly with where we stand. And we're going to use some charts from Into the Metaverse as well, or Into the Cryptoverse. It's one of my favorite sites that I use. And we're going to take a look at some historical data and see if this makes any sense at all. Give me 1 second, guys. My throat's really sore today, so I'm drinking a lot of water. So stick with me till the end. It's probably going to be a pretty long stream. I'm guessing maybe an hour, maybe even an hour and a half, because I want to trade live with you guys today and see if there's anything that we can find to trade and maybe make a little bit of money this weekend. My schedule is basically going to be Monday to Saturday, 10 in the morning till 8 p.m. every day, except for Saturdays. I'm going to finish around 6. Usually, as a day trader, you want to obviously put in as much time as possible, but at the same time, you have to set a window and a limit. You still have to be able to enjoy other things outside of trading. Otherwise, the stress gets immense. So it's really good to focus on the health, just focus on going out as well, and especially set a very strict time frame that you're going to trade. Before, when I first started trading, I would pretty much be available 24 hours a day to day trade. And I'm sure a lot of you are like that as well, where you want to look at the market as much as possible and hopefully you can catch as much as possible. But unfortunately, crypto is 24 hours a day. So because of that, you're going to have to set a window. Otherwise, you're going to go insane. So this coin, 1000Y, just kind of popped up out of nowhere. So first thing you got to do is always just check out the volume, right? I'm trading with a very low amount of volume or capital this year to start, starting off at around 33K. So because of that, I'm not going to be taking on bigger sizes until the market continues. So you look at a coin like this that just popped up over 1 hour, even though it looked promising to trade. And by the way, this stream is going to be, if there's something interesting to talk about from day trading, I'm going to talk about it. If there's something to talk about for Bitcoin or Ethereum, I'll talk about that. So it's going to kind of jump back and forth here and there, depending on what the market is doing. And right now we see 1000Y move. So even though it moved up 34% and it claimed the king for today for the most volatile move within 24 hours, it doesn't mean you should be gravitating towards it and feel any type of FOMO. So this is called the pixelation. Do you guys see that? Just look at it, where the bars are kind of horizontal like that. Green, red, green, red. It looks very pixelated, right? You can see it over here as well. It's not normal price action. It's just kind of like trading in the range. The spread is really, really tight, and it's trading in that range for a while. That's what it looks like, right? That's the pixelation effect. That automatically shows you that it's got really low volume. So instead of gravitating towards it, being like, oh, wow, it moved up 35%. I missed out on it. I can catch it. Maybe I should focus on it. Just look at how shitty it is when it comes to the volume. So because of that, it should automatically disqualify it from trading, okay? So Bitcoin's been very annoying. We all know it's been in this type of pattern for about, I think, day 50 now. Yeah, day 50. And if you look back, okay, like I'm not trying to scare you, I'm just trying to point out significance. Okay, if you look back at 2021, just check this out. I mean, this is the first part of a major drop. Something like that happens. It happened 4 times. Okay, one big on a large time frame that took months. Okay, this one here took like 3 months to finish. This one here took about only 29 days. This one took about 2 months. So these are basically distribution phases, okay, where they're loading up on shorts. Okay, and then the last one was over here. I think this was a little bit more than a month. So this guy lasted for 50 days, 60 days, 30 days, about 90 days. So these consolidations happen and then they drop. If you can tell me how this looks any different, I'd be very amused. I don't think anybody could even argue with me when I say that, well, I just showed you 4 cases in the past where something exactly like this happened. Now, another argument could be, well, that right here, always have your alerts on, okay? As a day trader, you're going to have tons and tons of alerts. You got to sandwich your alerts. You got to set it to recent highs, to support lows, rather than looking at the coin, every second. Having your alerts, it's going to allow you to have focus on the coin if and only if it does something. So I'm basically having my alert here above the high of STX because this is a very, very volatile moving coin. It's also on my high priority watch list. Actually, now it's on high priority. Okay. And I don't think Pippin's on it anymore. We'll see. Got to go over this list and see what's hot today. But I think that STX is definitely one of the hotter ones. I think that it's made very nice fractals that are moving. So you can see maybe this is the 1. That's a 2. That's a 3. That's a 4. There's maybe a 5 going up, right? So this looks like it's breaking up into a 5th wave. So it's going to be very interesting to see how far this 5th wave can go. So you just take a general guess at the 3rd wave, right? So this is beginning of wave 1 to the top of wave 1 to the bottom of wave 2. So look what you get. You get like a massive extension here. If this is the count, if and only if this is the count, this is how you guys do fib, okay? So that's 1, 2. So the first target is usually going to be here, 1618. Okay, that's a normal extension, like a reasonable extension. Anything above 1618, like I'm talking about 2618, okay, or 3611. Trust me, like we're gonna find a trade. You guys stick with me long enough, I'm gonna show you guys how I analyze the market. It's very rare to see people do this kind of level of analysis and trading. So stick around. I hope you guys learn just one small thing today that you can add to your own skill set. So if this were the count based off of Elliott wave, we have to try to verify. Okay, so to verify, you're going to look at, for example, a typical ghost pattern. Do you see the ghost pattern? So what we want is this RSI here for the 5th wave to be lower. Okay, and then you got your ghost pattern. So basically, it's a head and shoulders. I'm just making up some fancy, fun name for it, like a ghost pattern. Left, right shoulder, right shoulder. However you see it, it's a head and shoulders or a ghost. As long as this one's the highest, okay, and then the next one that forms is lower, okay. As long as there's some rules. The 5th wave, it can't be parabolic, right? If there's a large green candle that extends upwards, like that, it's automatically not a 5th wave. Even if it is a 5th wave and you're wrong, you're like, no, that can't be a 5th wave. It's got to be an extension because it's so parabolic or so green, and you stay out of it, right? Even if it is like that, that's fine, right? You're minimizing your risk by eliminating certain scenarios, how the 5th wave can behave. This way you avoid that type of risk. So I've always defined risk like this to people, right? There's a line. There's a very, very clear line. and you got to figure out where you are. Like, this is such a basic concept, but you guys will really understand it. Okay, so there's two sides, right? One side is low risk, low profit, and remember that without the possibility of risk, there's just no possibility of reward. So there's no way. Has anybody ever come up to you and they're like, hey, I know how to make a high amount of profit or a lot of money, and they say to you, it's low risk. You're like, guaranteed. There's like no risk at all, or there's really low risk to make a high amount of money. What's the first thing you would think? You would probably think it's like a scam or no way, because naturally we all know that there's no such thing as high profit with low risk, right? We know that every time there's a potential for high profit, it comes with high risk. And we know that like if you are looking for low profit, there's usually lower risk in general, right? Without the possibility of risk, there's no possibility of a reward, right? There has to be a factor of risk involved for you to profit. So you got to ask yourself, where are you? Okay, you are this, somewhere you're this circle. You're this circle. Okay, and that's where you are. How big is your circle, first of all? Okay, and where are you? Okay, do you know what I mean? So where's the range of you? Well, not the circle. We'll just make it a square. Like we'll make it another circle. So this is you. Do you want to take how much this side? Are you as a trader? You need to figure that out. That's like the number one thing you got to figure out, because this is related to risk management, right? So like me, I'm here. I'm probably like right there somewhere. I'm not gonna take anything, too low risk, too low profit, but I'll slide over to the higher risk side. That's me, right? So I'm the guy that's gonna take on I'll take on high risk. To me, I'm the kind of guy that's gonna take on like 1-to-1 RR trades, right? Do you guys know what I mean? I'll take on like no problem. I'll even take on 0.8, right? I'll take on 0.8 to 1, because those 0.8, you guys know what I mean? Like, I don't, even if my win rate was less than 50%, I'm still guaranteed to be profitable because of the risk management. This is such a basic concept that I'm going to go into it. Like, trust me, stick around till the end. You guys are going to learn a lot today. We're just going to go into the basic coin flip game, right? I'm going to show you guys so simple risk management. It's going to change the way that you trade when you think of position sizing and when you think of trading like over time, like a casino. Okay, just a coin flip game. Okay, so you're going to flip 10 times, and let's just say like there are different scenarios. So this one here is going to your win is 50%. Okay, like a basic. So each win is equal to $100. Okay, loss equals to negative 100. So clearly 50-50 is 5 wins, 5 losses, right? So that's 500 minus 500, right? Equals 0. So it's, you're not losing anything, you're not winning anything, clearly, right? So this RR would be 1-to-1. Just as the example, okay? So now, in the next scenario, let's just say that you focus only on trades that are like, 2-to-1. 2-to-1 where you're focusing on maybe of a higher probability trade. You're taking on less risk, not like a 1-to-1. You can win a little bit more than you can lose. So even, for example, at an RR 2-to-1, okay, and you're only winning 40% of the time. So over 10 coin flips, you would win $400, right? Sorry. my mistake. So you're gonna win 200 and a loss is minus 100. So over even something like 4 wins and 6 losses, it's it's gonna be 800, right? It's gonna be 800, and here you're gonna lose 600. Does that make sense, guys? So you're winning 40% of the time, but each time you win more than you lose. So if you won only 40%, but over those 10, you won more than you lost. You would win 800 and you would lose 600. So your net profit would still be $200, right? So if you, the higher of an RR you take, the more profitable you're going to be over time, right? But to do this, you also have to be a conservative type of trader and be very patient. Okay, so I'm just trying to explain that even if you have a losing win rate, you can be highly, highly profitable. So going back to the other scenario where I was talking about the two different sides like this, you have to figure out where you are. What kind of RR trades do you want to take? Are you going to be more of the high risk, right? So when you see certain coins, right, for example, like you see certain coins like today, like this coin here, US, okay, you see it move fairly nice. I could have caught a short on it. I could have caught I probably could have caught the top, to be honest. I even said to my lady right next to me, I'm going to enter it. I did enter it with 10K. I exited broken even because I realized, you know what? It's got $33 million of volume. It's not worth my risk. So that slides too much over the high risk side, right? Because low volume, low liquidity, it automatically moves the coin to a high risk coin. So because of that, it gets disqualified. So this type of qualification, or in this case, disqualification system, is very important for you to have to filter through the 600 different coins that you're going to find on your exchange, right? So give me a second, guys. I'm always going to drink a little bit of water. Whew. During that water sip, I was just thinking about New Year's. I was thinking about Athens. Athens is like, it's such a legit place to be for New Year's. The people are, it's like, it's not a part of Europe, you know? Like if you go to some European countries, okay, like sorry, since I'm streaming today, just a little segue. If you ever go to a country like, or a city like Barcelona, and then you go to a place like Athens, you just kind of understand the difference. Barcelona is scary, man. Like you can't be out at night. You can't, not as a tourist. Like you can't. You have to be careful everywhere. Pickpocketers, you know, and these people trying to hustle on the streets. And you just go to a place like Athens, and you're like, oh man, how does a place like this exist in Europe? Anyways, so that qualification system, very important. So we're just gonna follow USDT anyways, okay? So let's just say that, like you never want to be about, I would say a good number is like 1 out of 1,000. Okay, 1 out of 1,000. So 1 out of 1,000 means like 1 out of, in terms of percentages, okay? Of the volume of the market. I'll explain to you guys position sizing, like how I see it. So let's just say that this coin has got, you know, it's got $33 million in volume, okay? Okay, so, oh, sorry. Yeah, so that's it there. So you're taking 0.001, which is also the same thing as saying 1 out of 1,000. Does that make sense, guys? So 1 out of 1,000. Like, so multiply that by 2. Like your largest size you'd want to take on for that, you know, is probably about, you know, 33K, which is not much, right? Or sorry, it would be 33K total. So that's kind of like a good number to gauge it. So you want something with reasonable volume. You don't want to be somebody that's like a large position. You know, like if you traded like a much larger position, you're a larger percentage of the 24-hour volume now. So it's easier for people to play against you, right? Because you're now kind of the bigger whale in that position. So you kind of want to avoid having any impact in the market, because at the end of the day, we're little minnows. We're just following the whales, right? And what they're doing. Okay, good morning. Good morning. Thank you for joining me, guys. So Bitcoin is going to be in this pattern for a while until we figure it out. I still think it's a bearish pattern that's going to eventually break to the downside. I don't think it's bullish. I think that this is going to be a distribution phase where it will break down extremely hard. And once that breaks, hell's going to break loose. I remember this pattern here, right? When after this one broke over here, okay, and these lows got taken out, right? like after the consolidation phase here, I'll show you guys what I mean. It doesn't give a crap anymore. Once this distribution phase breaks down, okay, and then see this yellow line, that was the next low to break. Okay, once that yellow line broke, it did not give a shit about the rest of the support ranges here, because those mean nothing after that. Okay, it didn't care, right? It just flew down to the next support region, and that's how it is. See that? It didn't care anymore once this phase broke down, and it continued down to over here. It just flew down to the next zone over here, right? Next zone, right? So it makes that pattern again, right? Do you guys see what I mean? Gets to the next major zone from 2021. And during that bottom over here, it formed another distribution phase. And this one here, I shorted it with, oh man. Yeah, I can't remember the exact size, but it was like the profit of the year, put it that way. It was like, 5 trades taken that year or something for long term. And it just made everything worth it, because I remember leveraging the fuck out of it. That was a good trade, man, back in 2022. So I'm waiting for something like that to happen again, right? I'm waiting for this to break down. I'm waiting for, like, I'm waiting for exactly this, okay? This is a better way to show you. Okay, this is the better way to show you. Like, I'm waiting for exactly this. I'm waiting for a pattern to form that is clear as snow, okay, or as ice. This is a clear pattern. It's not going to be perfect, okay? It's not going to be like, oh, every single touch, it's right at the perfect line. It's like mother effer. It's good enough. That's a very reasonable daily chart, right? So I'm waiting for that, right? Then when it gets closer, that's where I'll zoom in. Okay, I'll zoom in to like a 4 hour, right? So, that definitely broke, right? It definitely broke. You would say 100% it broke, because this is too clean of a pattern, right? It's now like 94 days. You're not going to be like, oh, let's just adjust the pattern now that we have more data. No, motherfucker. You keep it exactly the way it was. You trusted that. You do not move your patterns because it now fits your bias and it's more subjective now, or it fits your narrative. Okay, you don't move it and be like, oh, it's got to be like that now. It's got, oh, this is the new one. No, you drew it for 90 days. You're going to keep that pattern and obey it and respect it. That's the law of the price action. Okay, and then now you're going to wait for a little support. You're like, oh, wow, it kind of held right there. Held right there at the previous low. Kind of. Did it? Let's observe. Observe more. Oh, wow, it definitely it's holding in that range, right? Definitely, I'm going to zoom in more now, because I'm interested. You should be interested too. You got kind of like a triple bounce. 1, 2, 3. Do not ever see a support as a specific price at the plus or minus 0.0001% of it. This is a support at the same support at the same support. These are considered all the same supports. It's a support range. Okay, this is now a support range. Okay, that's what it is. It's not a specific number. And it's clearly a support range. It's bounced how many days now? 7 days it's bounced. So we wait for this little fucker to happen. It takes patience. And then you go in with like a multi-million dollar position. And you don't look back. So it's forming a kind of a lower low and this little range. And then watch. Just keep observing. Let's see if it tries to get its ass back up there. Boom. So this one here, you would be observing it. Clearly 4 hours doesn't happen in 1 second like me. You would be observing this. Hopefully, you would be intelligent enough to be like, during the formation of this candle, be like, holy shit, it's breaking with force, right? It's breaking with force. That's a huge one. So you're going to probably zoom in even to a lower time frame, right? Lower time frame. And the moment that this support breaks there, that's where a lot of entries are going to be made. So it's not necessarily the break of the distribution phase. It's going to be the break of the first support to trade the continuation. And this is where, right, this is where many people will enter. The first phase of the entry is here. Okay, that's one amazing entry. Another one is the continuation of the break, okay, of the break. So after the major break occurs, I promise you that the next one will just be a small little relief rally because it's gone too far, too hard, right? So you wait for this one. And you can also always look back and use common sense and be like, well, you know, that's a pretty important region, right? Let's see if it's going to make some sort of pattern there. If it makes a pattern there, you know what's going to happen, right? Everybody's going to enter the market. Everyone's going to enter if there's a reasonable pattern that's going to form, right? That looks pretty fucking reasonable to me so far. But let's go look back a little bit more, right? So that's pretty damn good. That's crazy. So you got a low now. So anticipate it. Maybe it's going to be like that. Hold on, I got to go back. I can't. I gotta edit this alert for now. We'll go to STX soon. So maybe, you know, anticipate it. Anticipate, oh, it could be a channel. Oh, it could be, you know, a bearish flag. Something like that. That looks pretty good so far, right? Pretty damn good. I'd probably like short the fuck out of the next one. The next break, but I would be on a lower time frame though. Because you don't short. You're just observing on the higher time frame. But on the lower time frame, that's your trigger to enter. So this one's looking pretty good, right? I don't want to click too slow either. So now this is reasonable to be like, holy fuck, we got 3 points maybe, right? That's pretty reasonable to say, right? If I click too fast, it's me, okay? So there you go. So that's how it would have been. So you got 3 points. I'm just clicking too fast. Sorry, I apologize for that. But the moment that this breaks, right? The pattern breaks when you got 3 points. So this one here happened over 29 days. So if you got 3 points, you're going to be observing on even a lower time frame. The moment that it breaks, look for the next support. Where's the next support? It's right here. See the yellow line? It's hitting there, there, there. But where's the yellow line? Where's actually the yellow line? It's from way back over here. Here, 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 here. So clearly, if it's making a break for it, you'd probably want to short that continuation, right? And then there's basically 2 more examples like this. So right now, I'm basically waiting for Bitcoin to do that. If it does something like that, I'm going to be the one that's very prepared. Whereas, you know, people are not, right? How do I exit this? Okay, there we go. So right now, we're just waiting. We're just waiting for Bitcoin to do this. Where is... Oh, there we go. So we're now... I mean, that doesn't look that much different to me than a lot of coins that are behaving right... Or than how Bitcoin behaved last year. You know, that looks pretty reasonable. I hope that I'm wrong. If I'm wrong and we make another larger rally or we break the all-time high, great. What does it matter to me as a day trader? It doesn't. As long as there's an ideal and volatile but safe condition to trade with multiple coins to choose from, what does it matter to me if I predict bearish or bullish? At least I'll be prepared for the best scenario of a bearish trend. I mean, you think about the perspective of like 4 years from now, okay, guys? Within maybe 4 years. So in 4 years, we'll probably have a bull market, right? Would you rather now have an extended shitty bull market season? You know, after major ROIs already have been made, major coins have rallied, right? We had a bull market. Do you really want it to extend just a little bit more? But it's going to be forced. It's not going to be sustained. It's not going to be organic. We're at the tail end of a bull market. Do you want that just for a tiny bit more gains? This way, you know, when it reaches a real top, it's probably going to be shitty. And then we'll have to wait like 365 days for a bear market, or maybe longer this time. And then we can finally start accumulating, right? Which will basically make the next bull market season even further away, right? So that's one scenario. Second scenario is, yeah, just accept the bull market ended. Probably going to reach a bottom within 365 days of the top, right? So we'll be able to accumulate faster or sooner than if we had an extended shitty season. On top of that, right, we're going to be able to get into another bull market sooner. So that scenario to me seems a lot better than, you know, let's just have another shitty few more days. Good morning. I missed Toronto. Somebody said good morning from Toronto. What do I think about ETH going to the moon first instead of BTC? Yeah, let's just check out ETH-BTC ratio just for fun. Aye. Well, how do I type in FBTC? Oh, is it just FBTC? Sorry, my bad. So what is it at? Maybe it'll skyrocket. Yeah, we'll see. I don't have a lot of hope for Ethereum. What I do see is this. Argue with me if you want to. I just see a really fucking this is you know the beginning of an ascending triangle. And I think Ethereum's gonna hit here. It's probably gonna hit here sometime soon. It's probably gonna hit the lower end again. That's what I think. I don't think it's the time to DC anything, guys, okay? Nothing. I would be very, very careful. Okay, let's get into some data. You guys like data, right, guys? Let's get into some data. Let's look at some really interesting data. High five, Emilia. Come high five me. All right. So, I got a lot of things. I got to work a little bit more. Yeah, I want to work more because, guys, you know how, since I'm streaming today, not, you know, I'm going to talk about random shit here and there, so bear with me. I traveled for like half of the year last year, man. And it was just tiring. So I don't even want to travel this year. In fact, I postponed moving back to Canada like by a year and a half. So I'm like, I'll just stay in Turkey for a bit and just work. I miss working, man. That's all I can say. And yeah, so these kind of videos that you're seeing right now, this is the quality that like the Discord group would see. I just decided to live stream because it's Saturday, it's after the new year. It's the first Saturday that I've been back here, so I'm like, let's just live stream. But definitely think about joining the private Discord group of mine, guys. There's a link below. I will trade with the group, call out trades, you know, send out videos, and also live stream for the platinum tier. So let's look at first of all the monthly returns table. That's always one that we like looking at a lot. As you can see, in 2025 we had October, November, and December. Okay, October, November, December. Let's ask ChatGPT some fun stuff. Okay, want to see? Okay, so did you guys know this? Okay, how long did the Bitcoin bear market last in 2017's and 2021's bull market? Watch this. I bet you it's going to say 365 days roughly. Tell me in days. Tell me in days. So did you guys see that? Oh, look at that. 2018's bear market lasted 365 days. 2022's bear market lasted 365 days. Is that a coincidence, guys, that the bear markets lasted the exact same period of time? That's not a coincidence, right? It's not a coincidence, okay? So tell me, actually, no, I don't need to ask it that. I can show you it here. So if you look here, after Bitcoin halved, right? The halving, after it halved, all of the bull markets lasted, actually, let's just ask ChatGPT for fun. Okay. After the Bitcoin halving in 2012, 2016, and 2020, how many days did it take for each cycle to reach the top from the date of the halving? Watch this. It's going to tell you like 500 and something days. No. That's wrong. Oh, no, that's right. Okay. Oh, so sorry. I meant tell me for 2016, not 2013, 2020 and 2024. Sorry, guys. So watch it. You're going to find this very interesting. Okay, look. Oh, no, this date is wrong. This one is wrong. Okay, so look. In 2017, it was 525. In 2021, 549, and that's not 243. Okay, that's not, I don't know why that's wrong, but that's actually supposed to be right here. It's supposed to be 534 days. Okay, so this one took 534 days. So basically within like 2 weeks of each other. So the Bitcoin bull market lasted within 2 weeks of each other, and I just proved that. And also the bear market, 2 of them in a row so far, have lasted the exact same amount of days, 365, right? And also the bear market bottom, right, in roughly the same time frames. So take a look at when it bottomed. So it bottomed like roughly around the same period. So I'm getting excited for, like October this year. So the day that we actually we reached the bottom here was November the 9th, okay? I'll explain to you guys. Bear with me. This one's November the 9th, okay? But in the next one, or sorry, in 2017, in 2017 it was different. I think it was December the 13th or something. No, December the 17th. So in 2017 or 2018, it bottomed in December the 17th. But did you notice that like in 2022, it bottomed in November instead, like a little bit earlier, right? Which is like about a month and 2 weeks earlier. The reason for that is because, well, the halving was earlier as well, right? So the halving was earlier for 2021's bull market. So naturally, the bull market's going to end earlier as well, because they're still within that same period of like 540 days. But if you look at this cycle, our halving was in April. So naturally, we're going to end somewhere even earlier than November. So that's why it ended like in October, which is what most of us predicted. So now I'm just waiting for this cycle to drop, right? I'm waiting. Like, let's just say it took 365 days again to reach a bottom. It's not that far away, guys. Like, we're talking about October again to start accumulating. Well, more like maybe from August. So I think that August, September, October is going to be like a really crazy month if everything goes as seems historically, right? Okay, so let's look for a trade today. Enough with Bitcoin. So this is 1000Y. I think we looked at it already, right? The volume, 13 million. So it's picking up. If I was like a billionaire and I had like $250 million on Binance for fun, I would just go to this coin that's trading at $13 million and I would just fuck everybody over. I'd put in like $1 million buys and sells, for fun. Like, that's how some whales probably are. They'll fuck with you, man. Like, if you own the majority of the coins on trade, you can screw everybody over. Well, you don't want a majority ever though, because then there's no liquidity. But I mean, like, not like a majority over 50%, but a majority. So this coin here is just off the table, unfortunately. You just can't trade it. I mean, you might say to yourself something like this, right? You'll be like, you'll make an argument with yourself. Like, we're always going to have these little arguments with ourselves to convince ourselves something that's going to fit our narrative. Like, sometimes we know this coin's bad for us, but we're still going to look at it to try to find the positive. And then you like make these reasons why you should trade it. So some of your arguments with yourself would be like, well, I don't trade with a lot of capital anyways. I don't have a lot of money. My position size is very low. So I can trade this low volume coin, right? But whether you traded it with a low volume, right, or a high volume, the same thing can happen to the coin. The behavior of the coin is not going to depend on your position size. It's going to depend on the low volume itself of the coin and the nature of the coin, right? The disinterest in it from the market, the very, very low liquidity, the high slippage, right? The movement of the coin will be dependent on that, not your 5K position size. So when you compare it versus like a high volume coin, right? There's going to be no slippage. you can trade with large size and not have to worry about like, oh fuck, you know, in bull market days, I'm market executing like, you know, I'm $250,000 positions, right? In a bull, but the coin's got like $1 billion of volume. So I'm market executing 250K, and the slippage is like 0.1, 0.2% maximum. That's great. But if you do it on a coin like this, you'll have like 3% slippage, right? So on a high volume coin, you can really trade that high volume as well as for high position size, and not have to worry about, you know, like a big wick or something like that, something more reliable, right? So you compare this coin with a really high moving coin, it's irrelevant your position size. You just want to go for the coin that's going to behave rationally, something more predictable, right? So even if you have a low volume coin, why set up bad habits? Why not focus on good habits? Trade like you have $1 million, man. You know, trade, follow the risk management rules. Of course, your strategies will evolve. They will definitely evolve to a higher level over time. Some of the small mistakes that you make, you're not going to make them as much anymore, right? So just any mistake, you have to be able to catch it. How can you ever change if you can never catch your own mistake, right? Whether it comes to sports or academics or human behavior, anything, right? Trading is the same. If you can catch your mistakes and you can prevent them, but not only prevent them and not make the mistake, but also improve on a way to, you know, produce a positive result rather than something negative, right? That's going to allow you to optimize and change your strategies to a point where they evolve to fit your trading style and your risk management techniques. So this coin, guys, you just stay away from it, okay? It's just like this coin here. You know, I could have shorted it earlier. You could probably still short it, but it's got 3 million. Not the best conditions. But another argument would be like, but Phil, like maybe your volume requirements are too high in this type of market. Yeah, I can understand that. But then again, like, because I understand that, I just reduce my position size. There's no more $250,000 short positions in 2 minutes. You know, there's no more any of that shit. Phil, you had the good days. You had 545 days, actually longer than that, you know, to have. Here's an interesting chart, guys. This is a very, very interesting chart, okay? This one is gonna blow your mind. Okay, let me just ask ChatGPT this. This is funny. Okay, from the bottom of the 2015, hold on. How long did each cycle for Bitcoin take from each bottom to each high? Okay, and tell me the years. This is a very interesting prompt. How long did each cycle for Bitcoin take from each bottom to each high? Did you guys see that? Look at that. 2017's bull market, 1,069 days. Okay. If you need a code, well, guys, I got cargo coming. Oh, is it? Okay, sorry, darling. So 2017, 169. 2021, 161. Or 1,061. 1,069. And then to now, 1,050 days. Fuck. Is that crazy? Like guys, think about that. Okay, 2017, bottom, like a bull market was like 1,069. Bear market, 365. Okay, 2021, right? Bull market, 1,050. Or sorry, 1,000 what? That's crazy. 1,061, right? Like how you guys know what I mean? Like how fucked up is that? Bear market, 365. At 2024, bull market, 1050. So like that's kind of crazy if you look at it. This is like from a 10-year statistic, right? Like literally a 10-year statistic where 3 times it's been similar thus far. 11-year statistic, you know, from 2015. So it's like, how can I not believe in any way that it's not going to be different, right? And everything makes sense. Like the ROI is diminished. You know, of course, the first bull market, we're going to have massive ROI. You know, like ROI in the 400s. And the ROI gets lower because the market cap is higher. It's, the market is more diluted with crappy coins. The market cap is spread. It wasn't like 2017 where everything was like on XLM, Cardano, Zcash, Omizi Go, IOTA, XRP back in those days. Now you have a dilution of the market with like 4,000 coins out there, right? So of course the diminishing returns are going to be there. So the ROI is lower, 110 to even lower over here, right? This one here in the green is 19, and then it finishes off like at 7.8, so of course it's going to get lower every single year. So the people that got in, in 2017, like me, I got into crypto in 2015, January or February, I think 11, 2015. Right when I got into crypto, guys, you couldn't, there were no banks, man. Like there was no banks that you could deposit things to. And if there was, it was a nightmare to go through that system. They would basically take your crypto and then they would go through whatever your country's, like in your country's normal bank to bank sending is. Like in Canada, it's called e-transfer. You just transfer from your bank to someone else's bank. It's easy, right? So then you send them crypto. You'd wait like 2 days for them to process it, and then they would send money to your bank, right? That's what would happen. And if you wanted to buy crypto, you would do the same thing, right? But if you wanted to buy in cash, you have to go with a machine. There's no credit cards. There's no like, withdrawing it directly from your bank. None of that. When I got into like Ethereum, when I got into it, you were still mining it. You were still mining it with normal video cards, like literally, like, normal video cards at home. So I was still like mining it. It was crazy. Back in, like mining it when Ethereum was less than $1. When it was like fucking like a quarter or something like that. It's crazy. That's like the people. But of course I didn't capitalize as much as I wish I could have because of what I know now, right? Or compared to what I know now. I still did a reasonable job. I mean, I turned like, 400 Ethereum to 150K within 2 years and 2.5 years in crypto, right? Those people, they're the ones that got lucky, like me, you know what I mean? Like we got lucky. Some people got really lucky where they had more money and they took on more risk. But like my first bull market, I knew nothing, man. Like holy fuck, like it was crazy. But now, like, give me a bull market again. Give me one good bull market. So you see that they all lasted the same period. They all have diminishing returns that are reasonable. They all lasted the same bear market. So clearly I'm like, yep, probably going to do the same thing. So anyways, so Polygon is good. It's looking very nice, but we got to confirm with volume first and foremost. So reasonable volume, 328 million, still moving up, like very nicely, organically. Doesn't look pixelated. Has reasonable, like reasonable Elliott wave structures, like very, like maybe not exact. There are two different reasonables. One reasonable is it looks like there's one, two, maybe a 3, 4, 5, right? That one's like semi-reasonable. Very reasonable would be each fractal can be divided within the subwaves. But here you clearly see that it's not the most divisible, this one here, but maybe it could be something crappy and sloppy like that, right? Maybe, but if it was that, it couldn't have been that either, because then the third wave is the smallest, right? So it's a fucked up count. It really is. Do you guys see what I mean? So it can't be, because this wave in here is now the smallest wave. I just measured it, right? So if I take this green box and I put it anywhere else, it's smaller. If I go to here, it's also smaller. So this one in the middle, the third wave, is the smallest wave. So it can't be that count. So because it can't be that count, it's probably this count. I'm going to take that as an extended wave. Actually, fuck, that's a very difficult count. Yeah, like this one here, it's impossible. But this one here, if you see it, the way it's broken up, it has to be a B structure. So you're forced to do one of two things, okay? You're forced to be like, all right, that's got to be the count. Even though the third wave is smaller, you make up some shit like maybe this one case. But then again, you remember the rules and you're like, it cannot be that. So then you have to force a count that makes sense, okay? So the only count that makes sense is this one, a small 5, right? And then the next count that makes sense is a running flat. Because if you look here, this one here, the B makes sense, right? The B makes sense. Wow, right here, because this makes A, B, C. And you can't subdivide everything, but maybe that's like a 1, 2, maybe truncated 3, a 4, and some 5 like that, right? To make the C into a 5. So either way, what we can conclude is that this is the most parabolic wave. Therefore, it is the third wave. Therefore, we can just assume that whatever count this is, it's a 1 and a 2. Fair enough, right? It's fair enough. So let's just work with that assumption. So based off that assumption, this has got to be a 3, right? And unfortunately, I wasn't able to follow this, okay, because this rally has been going on for 2 days now. It just popped up on the radar because it's a very subtle coin. Let's see where the next reasonable support zones are. The next reasonable one is probably right here. I'd say right there. Right there for sure. On a daily chart, doesn't it look perfect? Perfection in terms of, first of all, this is where it broke down. Right? It broke down below the yellow line. Everything below it is literally bear trap, bear trap, bear trap. Here is not a bear trap. Here's the true break. And then here's the retest. So this is clearly a very strong resistance, which is most likely going to hit it. Why would it not hit it? Right? So because it's probably going to hit it, you have an opportunity to take on some small risk if you want. So, you could try to long it if you have a lot of conviction that it's going to hit there, right? It did just temporarily break out of here, right? It broke out of there 100%. That yellow line right there broke out. Resistance, 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 broke out of it. Didn't even need to come back down to retest it. So if you were to take on a trade right now, a scalp as a day trader, you would target that resistance over there and you would take on a small amount of risk with about maybe a 2.5%. So I'm just giving you guys an example. So this would be a phenomenal trade to be taking, because there's a high amount of potential for it to reach over there, right? And it's also a 1.24 risk to reward. So I think it's a reasonable trade to take, but know that I'm not a financial advisor in any way. I'm just giving my opinion on the market. So that is definitely a reasonable trade to consider, okay, on Polygon. So we're going to come back to that, see if I'm right? See if I can find a better trade than that. So this one's on my watch list, heavy on my watch list. Let's just see for fun if it's going to smash up there. It's got a lot of volume. So is this a trade that you guys would take? Right? It's definitely a reasonable trade because the RSI is still making its way up. Like it's still looking very sharp, this coin. Yeah, let's look at Pippin. See, let's go through the coins on my watch list now. So Pippin is, it's a very good coin to be following. So it goes in high priority. The reason for that is because, sorry about my cat if you guys heard, it makes about 5 like that, roughly. Reasonable 5s on a lower time frame. So what we want ideally is for this to be a 1, right? A 1 and a 2, and then a 3 pops up. That's why it's on my watch list, okay? STX has got very, very erratic movement, right? It's got sorry, not STX. This one's got great movement, right? It's got great movement so far. There might be a potential for, some sloppy fifth wave to show up there. So this guy goes on my watch list, so this is a very good coin as well to go on my watch list. And by the way, guys, this is very rare for me to be doing this, like publicly. So if you guys want to get the best updates, I strongly advise that you guys join my private Discord group. This happens very frequently, especially in the platinum tier group. You're not going to you're not gonna like, you know, following a lot of those YouTubers and stuff like that. I don't mean to be rude towards them, right? But a lot of that is for entertainment value. You know, people like Coin Bureau or you know, Altcoin Daily, you know, or even Alex Becker, right? They're just guys that know how to produce videos. They edit them. They have lots and lots of followers because they're fucking entertaining. Put it that way, right? But the real value is like is getting you know, if you want to trade, right? There's no better place to day trade than this. Put it that way. So join my Discord group, guys. If you guys want to get the best value when it comes to day trading, just try it with me a few months. You're going to learn things that you never knew that you knew. So this is a very good coin. So we've now got like a really good list of coins. Like, you know, potentially a Polygon long, Pippin. We're watching for another continuation. Let's put an alert here to let us know. So we have to always use alerts. Don't be one of those people that like, you know, like, I'll remember, you know, like, I'll fucking remember while you're following like 30 coins, right? You're not going to remember, motherfucker. Put in an alert, right? Put in an alert there. So you kind of draw a little picture if it's going to help, right? Put in an alert and a little picture to let you know what you're looking for. So this guy here is not really breaking clearly above here yet. You know, I want to retest. Give me a retest, bro. You know, that's where it broke, roughly. Right, yeah. You got to always, never, ever, ever in your life draw tip to tip. Like that, okay? Never in your life draw tip to tip. Find a reasonable time frame where the bodies are averaged. This is a very good time frame. 30-minute time frame, right? That's a good time frame because it's like averaged. But if you go on the 5 or 15 minutes, too high. You don't want that, right? You got to account for some bull trapped regions. That's why. So let's see if we get a retest right there on STX. So this is the general rule. This is like the rule of trading. Okay, if it's a slow market, okay, it's slow market. You know, you still have to come back every hour. You can't just chill and watch TV and play games, right? What I would recommend is the 15-minute rule every hour, right? If it's a slow market, spend 15 minutes every hour, right? 15 minutes looking at the market, analyzing it. Then 45 minutes, go do whatever the fuck you want, and then come back. But you always have to put in the time. You can't go to the office and be like, oh, it looks like a crappy day, and then you just go masturbate for the rest of the day or something like that. You know, like, you have to put in the fucking time. Be at the computer, be present. Also, you know, being on the sofa and watching your phone while watching movies, you know, that's not the way to do it, right? You can't do that. You have to be on the computer. You have to have windows open. You can't just scroll on your phone, you know, and be like, yep, I'm going to be you're not Philakone crypto, right? There have been some bull markets where I traded only on the phone, like in 2021. And yeah, so you can't do that, right? You have to have the watch list. You got to be able to have data and also dissect that data quickly. And a phone is not something you can dissect data quickly with, right? You want to use the computer. So CLOU, we're waiting. I called the top yesterday on Discord for CLOU, right? I said to everybody, hold on, where the fuck was it? Maybe I didn't post in this group. Did I? Oh yeah, I did. Possible fifth on CLO, but warning, negative funding fee. So I called it from the top yesterday. And clearly it dropped. So this was not an easy trade to take, nor did I take it, okay? I didn't take it and it was not easy. So maybe from up there it was easier. When I called it, I was calling it like around 82 or something. When did I call it? So if you guys were in the Discord group, you would get signals like this quite often. 82.07, right? I actually ended up shorting it, but I took a loss on it just because I was ending my day. So you can see here, right? Hold on, is my camera right? Okay, that's good. So this is the only trade I took this year, 1700 on Bong, but I exited the CLO trade simply because, see the time? It was around 6:14. I wanted to start making dinner with my lady. So I exited the trade even though I knew it was going to go down because it was outside of my office hours or it would have taken too long. So I just finished yesterday with $300. Who cares? Not much. Good enough, you know? But man, when I call a top, as you guys know, like when I fucking call a top, man, you know, it happens. So CLO is basically on our watch list because there might be a potential for another wave. So we're gonna just kind of follow this loosely in the background right now, okay? The GMT has been moving extremely well, right? GMT, that's from step end, if you guys remember. I need some water. What helps you finding coins with high value of interest? Usually the interest is like, what is it called? Jeez, I can't remember the word. It's called trading data, open interest, right? Generally, you want a coin with reasonable open interest, and anything that I find generally interesting is something with volume. Something that's not going to fuck me up. You know, like, it's not going to cause a big wick because of low volume or low liquidity. You can generally look at the order book as well, right? You can look at the order book right here. For example, you can click on just the cells. So it shows all of the order books on Polygon, right? And it tells you the sum. So this is a very like reasonably good, like high liquid coin. Because if you see, for example, I have to screenshot it so you guys can see. So we're going to talk about the order book. You can just glance at it and know. So here's the order book. You can see that for the sum here of just this price alone, right? Right there, the sum, right? You can see all of the sizes. So it's reasonable. Do you guys know what I mean? So it's reasonable just by looking at the sum and also the sizes of what's here to see how the liquidity is. So this is the sum. This is how much right here, okay, of that particular price, okay? So you can see that if I made a $100,000 order, it would only tick off this one right there. That's kind of what you, but if you see these really low numbers and it looks like there's a 2% gap between the top and the bottom with very little size in USDT, then you just know right away that, oh, if I trade like 50K, I'm going to eat up 2% and the slippage is going to be ridiculous. So you don't want that. So you have to find a way to protect yourself from going after, you know, for all the dangerous things that you shouldn't, right? Because the more you protect yourself from the dangers, that's going to be better. So you can see this Polygon here is just trying to fight a little bit here, right? You know, if it gets to the yellow line and it retests it and it supports it, fuck yeah along it. So GMT is like, you know, this coin's kind of wild. It was moving very nicely, but now it's not. You know, it's not nice. But we'll keep it on the general watch list. VV is the one that was moving yesterday. So see these type of moves? These moves I don't like. So what do I define by move I don't like? A move that I don't like would be something like where the kernels are a little bit... Actually, no, it's good. It's reasonable. It's bouncing off the kernel. But what I don't like is parabolic moves and stretches above the kernel. Those coins, I don't like them too. And then they snap back hard, right? I don't like coins like that in any way. Like, for example, this coin here is not that bad. Okay, this one's not that bad on Polygon, right? It's not that bad compared to the other ones. So I'm going to avoid those. Do fib level works with these shit coins? Yeah, they do. But it's not that the fib levels don't work. It's more like on a shit coin with low volume and low liquidity, it just takes one scenario. Like the percentage and the chances of something black swan happening is higher. When I say black swan, I'm talking like you're in a long position and then you're leveraged in a long position, maybe times 10. And then all of a sudden, like you're long. And then all of a sudden, okay, some guy decides to dump on a low volume coin a lot. And then it causes a 20% wick. And then you get liquidated, right? Because you only need to move 10% to get liquidated with a 10x leverage. So the chances of that happening is not high, but it's there. It could be 0.5%, right? Or maybe 1%. But you take 100 of those types of trades, it's going to liquidate you. So why not just eliminate that 1%, that possibility? Why not set the criteria and the standards a little bit higher? It's like anything in life. And I'm just going to relate it to like relationships in real life. I'm not going to be like vulgar or anything, but just think about, a man or a woman that's gone through a very bad relationship, right? They've gone through a bad relationship. They're going to do one of two things, right? They're going to either keep going for the same type of people, and accept the same type of behaviors, maybe not have any boundaries and keep getting, hurt, right? And they can keep doing the same thing, which is like a metaphor for like, you could be a trader that keeps making the same mistakes over and over, or that person, that person could like look for new qualities in the person, right? Redeeming qualities, high value qualities, respectable qualities, like, wifey material qualities, like family oriented, good qualities instead of bad ones. And then when they make the change from what they were dating before to the change of maybe, dating like with higher qualities, then the quality overall goes up, right? So and then you're going to be happier. Long-term success is going to be better, or happiness. So when you go for the higher quality types of trades and you eliminate the bad ones, it could only be positive for your crypto career, right? So having this process of elimination is great. Otherwise, if you can't run after every coin. Just like how a man can't run after every woman out there just because she's got a vagina. You know what I mean? You can't do that. You got to have some standards for what you want in your life and what you don't want. You know what I mean? So it's like, yeah, have some high quality standards. You've got 500. Look, you got 537 coins to filter from. So yes, you're going to take your sweet ass time every day as a day trader. Doesn't matter how boring it is. You all want that. You want to be able to wake up, go to that coin, and be like, holy shit, this coin's moving up 1,000% today. I'm just going to long it. And it keeps going up more. You want that scenario where you wake up and you're going to find that gem to trade right away. But the sad fact is, like, being in the position itself of a trade, it's probably going to account for not even 25% of your entire time, maybe even 10%, because the majority of your time is going to be spent in the front of the computer in the planning process, right? The planning process. So we're going to keep going through this list. So XVS is reasonable, right? This coin's like, it's definitely a reasonable coin. So what am I looking for exactly? Okay, I'll tell you what I'm looking for. Too long. Okay, I'm looking for a 5-wave structure that I think could make a 5-wave structure. Okay, that's what I'm looking for. I'm looking for ideally wave 1 to be done, wave 2 to be done, and wave 3 forming. Okay, wave 3 could be only up to here, maybe right here, maybe right there, or up there. Doesn't matter. As long as there's a wave 3 that's forming, or a wave 3 that's ended already or getting close to that, that's fine. As long as it breaks this structure. This is the phase that I'm looking for. Okay, I'm looking for a phase that broke wave 1, and it can be anywhere above the yellow line. That's what I'm looking for. So when I see that, right, what I see is then, as long as these are fairly subdivisible, okay, so let's just say wave 3 is forming, but it's only here right now. It's only here where, like, maybe it's only got to wave 3, right? It's only finishing sub-wave 3 within the big 3. Well, maybe if that's forming, I can find a short there, right? Just try to short 4, right? Maybe if I see the 4 forming, so it's now, the green box is now over here, right, to 4, right? The green box now goes to 4. Maybe I can long it to 5, right? I can long it to, maybe it's actually all the way up here, close to a 5th. Maybe I can get ready to short from here to short the big 4, right? Maybe that's all done and it's now, wave 4. So all of this is now done too, right? Maybe I can find the bottom at wave 4 and I can long a 5. So that's what we're looking for. But the structures need to make sense, okay? So you look at a coin like Pippin, it makes sense, right? The 1 is done. We're just now waiting for maybe a 2. We have an alert that's above the last wave over here. So we're going to see if we can catch a 3. So you don't need to catch a trade every day, as long as you're putting in the time. So STX, same thing. Waiting for a big 5 to form that's clear. This is not clear yet. This is like a channel. You know, the channel is like, actually it's more like a diagonal that's squeezing, I realized. Man, that's great. If this bull traps, we can short it. Right? Let's just see. Yeah, we can short that for sure. This could be a liquidity sweep, and then it continues down. Oh yeah, that could be. It could be. You never know. Lesson 136 on my Discord. Lesson 136 is my favorite. I have on Discord. There's long lessons, like 100 something long, 160 long lessons, 132 short lessons. Man, this Discord's a library. Anybody that signs up or that's here for even 1 month, you get your values worth as long as you're putting in the work yourself as well. So lesson 136 is simple. Okay, it goes something like this. Okay, when there's a huge wick, a failed breakout attempt, and comes right back down below the resistance, it's a good place to short. Okay, that's basically called a liquidity sweep. So resistance, 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 big wick, a liquidity sweep, price comes back down, you would zoom into a lower time frame. When it gets rejected on a lower time frame confirmed close, you short. Every time you will win. Every time. I've never lost a trade like this. Wick, 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 big wick. Zoom into a lower time frame. If it starts to come back down upon entry or upon close and confirmation, short. These strategies are great. If this happens, I'll do the same thing, but there hasn't been a lot of hits, so maybe not yet. But then if I'm right, then that could be the 5 waves. So this coin is definitely on the high priority watch list. Polygon. See, Polygon. So that trade could have been taken, but it wasn't for me. You know, it's too, like, I was just making a suggestion. It's a good trade to take for people that want a little bit more risk. Even though the risk to reward ratio is 1.24 and sort of favorable, still a high risk because you're so close to the top already, right? So close to a top. In fact, I might even be willing to short it. So these are all coins that are on my watch list from the daily, from the movements for the week, right? So we're just gonna quickly go over it, see if anything makes sense that catches my eye. Render was really nice, but it doesn't really do anything more than that. So these are all the monthly gainers. Missed Pengu, missed Useless, made an expanding diagonal that just popped down. That was a good short, man, but I missed it. So let's just take a look at what else is going to catch my eye. So, you know, I keep these charts here still because they're the monthly gainers. So the monthly gainers might do something again, right? I'm looking for something like 5 waves like that, you know, 5 waves like that. I want something like that, but none of these are like clear. Pepe made 5, 1, 2, 3, 4, 5 like that, right? Bonk made 5 waves. So I missed a lot of these coins. I'm looking for something similar now. So because these coins have made 5, right, the ones I showed you, this is basically a 2. Let's see if a 3 forms. That's why I'm putting it on here. And every day I go through this watch list. When I log on, it takes me about an hour a day. I sometimes do it privately and then give a summarized version to Discord. Sometimes Discord gets the full version and I live stream. It all depends. This is very much so expanding, if you've noticed, right? It's like kind of a scary type of expansion because it's so narrow. So GMT or GLM is one of those coins that, like, I don't think it's got good volume though. I'd probably gonna guess 50 million, 14 million. You can't trade that, guys. You know, like, you can't take it. Yes, I am still in Turkey. I'll be here for another less than 2 years. Decided not to go back home yet. So yeah, so this is an expanding diagonal. That's a very parabolic coin. It's moved up a substantial amount. GLM 52% in this year. Nothing I would trade right now. Too low volume and unpredictable in the expanding diagonal, but it trends nicely. But due to it, I just keep it on the general watch list. Virtual is of zero interest to me now, but it moved up this month. a lot. So these coins are all top movers that are doing fuck all, if you've noticed. ARC is like, I don't know about ARC. It's too low volume, I believe. ARC is 24. I don't touch that. I don't fuck around. And then there's US, right? This coin here. I've moved that to low priority for fun. I choose a fun coin today. So basically, we went through every single... These are all the top gainers, by the way, for the month. I'll show you. So you use the crypto screener. This one here is the top gainers for the month. So you'll see that basically I have every single coin over here, sorry. Every single coin that are moved up a lot on my watch list. Except for BUSD and 1000Y. But those ones were all shit coins, so I don't have them on. So I got all the top gainers, plus the ones that moved today. And out of everything filtering through 500 coins, I've only got maybe potential for a Polygon long. If it breaks up there, maybe, but more likely a short. But that's not a trade on the table. Forget about that one now. But the stop loss is still set if you took it. Waiting for a fifth for this guy? Well, but then, you know, Pippin would be in the same boat as things like, you know, Pengu waiting for a fifth. You know what I mean? But I just like Pippin more because of the way it moved. 100%. STX, I really like STX. Right? I like STX a lot. That'll be pretty much my trading now because I'm so interested in STX. And maybe longing it. Maybe longing it, yes. Or sorry, shorting it, not longing. Shorting, not longing. And then Polygon is the only two coins. And CLOU. So these coins are all like this coin here. It looks like it could be a fourth making. So I want to see if there's a fifth. So, but other than that, like there's nothing else that's interesting to me. I think Pippin's low priority. The ones that I've made 5, we're gonna move them to low priority instead. So Pengu goes to low priority. Render note far bonk. So these guys are all the coins that are basically moved in 5s, right? And now I'm waiting for like a retracement to see if it would do anything. So these coins. So that's kind of it. So that's what I do every day. And then after that, what I do is I go through each coin one by one. But honestly, I'm just watching something in the background. I'll just go down one by one. You know, like maybe zoomed out. You know, zoomed out a little bit. Like maybe 2 weeks. I'll just go through it and I'll see if there's a coin that catches my eye. If I saw a coin like Polygon, I'd be like, whoa, I didn't catch that. So then that would go on my watch list. I would just do it really quickly. Right? I would just go down. You'll see what I mean right away when I see a coin that catches my eye. This one. Clearly it's catching my eye, right? Because like the structure here. So like, whoa, that's 5 waves. It wasn't on my watch list before. So you add in your watch list. Now, 90% of the time that you do this, you will never see anything. 10% of the time, you'll see a gem. Actually, I would, no. Like, I'd probably say, I'm talking about like, yeah, about 10% of the time, you'll find one coin. One coin. Not 10% of the coins I'm going through. I'm talking about per day. So you do this for 10 sessions, maybe one time you'll find a gem. One time. So there's nothing here. So to go through every single coin one by one. And you're basically looking for a coin like Polygon. I'm not going to do that in front of you guys though. So that's it, man. So after looking at the market today and going through like a nearly 1 hour, 20-minute analysis, I've concluded that the market fucking sucks. The market has been sideways for Bitcoin for about 50 days now. Ethereum is looking even absolutely worse. The market cap is in absolute shit. The total 3 market cap bull trapped. Basically hit a top for 5 years now. We're in an ascending triangle. Ethereum's in like a 10-year ascending triangle pattern. So I don't recommend buying anything right now long term. And out of an hour and 20 minutes of analyzing the market, these are my watch lists for today. Just trading. STX, we wait. You know, we wait to see if it's going to bear trap or bull trap above it. Then I'll probably short if it falls back down. Fuck yeah, I would. Actually, my level of a short validation would probably be below this resistance there. Yeah, around 38 ranges. So now I'm going to get some lunch. It's already 4 p.m. I didn't eat yet. And I'm going to follow STX and Polygon to see if Polygon gets up there. And STX breaks back down below, not up. And then I'm also following CLOU. So nothing is on high priority. Actually, I'll put these guys in high priority, which will eventually lead to the trading now. That's it, guys. I'm going to end the live stream. That's all the energy I have today. I hope you guys enjoyed this, and especially you took something away from this, because I'm not just saying this because it's my video that I made, but I promise you that a video like this, one day people would appreciate the level that goes into finding a trade and actually seeing somebody do it live, right? So I hope you guys took something away from this. Enjoy, and I'll see you guys in my Discord group, man. If you guys haven't signed up already, trust me, give me 3 months of your time. You're going to see the